Well, let's turn to, in the economy, a very important sector, roads. Rating agencies told us earlier this week that the roads sector has seen a large number of upgrades in the half-year ended September 30. Rating agency ICRA in particular said the sector saw 15 upgrades in FY22 versus only 6 downgrades, that's last year. And in FY23 too, the number of upgrades is going much stronger than downgrades. And this is due to fast growth of traffic and growth in tolls. Look at the numbers coming up for you. For new projects, the expected toll increase is 14.5%. To discuss the prospects of the sector, I have with me two experts. Vijay Kumar, the head and VP Finance at NCC, the big road construction company, and Rajeshwar Burla, the group head corporate and infrastructure ratings at ICRA. Many of the numbers I quoted are Rajeshwar's numbers. Good morning, Mr. Vijay Kumar and Rajeshwar. Thank you very much for joining me. Mr. Vijay Kumar, I first want to ask you about the extent of awards. One of the points that Rajeshwar mentions is that awards have not been very good in the first half. What's your take?
Yeah, that is true. In fact, the global uncertainties and the kind of price escalation that has been a concern for the industry. What typically has happened is a portion of, if you observe a portion of industry, they have postponed the project execution also. That is essentially because they want to wait and watch and see if the price can be, prices are falling, and then they can go ahead with the procurement. So typically why this happens is if your contracts are not having adequate pass-through clauses, and if your contracts are aggressively bid price contracts, then you will have to, wait, and you'll have to get into wait and watch situation. This is largely because because of this is the sideline flip of the competition what we are seeing in the sector now.
And one minute. Mr. Vijay Kumar, 1 minute. What you're saying is that prices are very high and competitive intensity is high, and that is why the first half was not very rewarding?
Exactly. The prices went
Okay, I'll just get back to you, Mr. Vijay Kumar. I'll just get back to you. I think we have an audio issue. Rajeshwar, I'm basically quoting from your report.
Yeah.
What is the sense you're getting? The high prices have not gone away. As your own report says, even after the fall, steel prices are much higher than what they were, pre-COVID or even 2 years ago. Do you expect, first of all, give us what is the first half situation? How much lower than normal? And what is your reading of the second half?
Okay, sure. So if you look at the overall execution in the first half of the financial year, it is lower by about 13 to 15% when compared to the corresponding period for the previous year. Now, although in the road, the contracts, there are price escalation clauses in the agreement, as Mr. Vijay Kumar was also mentioning, because of the high surge and the volatility in the commodity prices, many of the developers have delayed the procurement of materials and have gone slow on the execution amidst this uncertainty, because of which the overall pace of execution has gone slow in the first quarter. But we expect now the pace of execution to ramp up quite sharply from Q3 post the monsoon season. So overall for the current financial year, if you look at our estimates are about 12,500 to 30,000 kilometers in terms of the overall execution.
Okay. How would you react to that, Mr. Vijay Kumar? What has been the awarding in September, October compared to the first 5 months? First 5 months, clearly, the numbers were, about 2,500 kilometers compared to over 3,000 kilometers a year ago. What is the performance in September, October?
You see, typically, the global uncertainties and the tail end of the pandemic effects are still dragging the industry in the quarter one. You see, out of something like 1,600 crores of projects, almost 1/4 of the projects are delayed. That is the kind of numbers we are talking. and the time overrun obviously results in cost overrun, and there is about 20% of the projects have been delayed. If you see the overall Indian infrastructure scenario, so this is basically what we feel. This emerges out of, if you have tough competition, if you have an aggressive competition and aggressive bidding that happens, and if some of the players compromise on long-term perspective for short-term benefit, this will be the sideline clip.
I get
So
that.
this is
I
how
get that, Mr. Vijay Kumar. Can you tell me what has been the awarding trend in September, October? Is it better than the first 5 months?
I think we believe we are seeing a bit of improvement in the second quarter onwards, because because of the more predictability in execution. I think we are seeing a little bit of improvement there.
Can you give any numbers?
I don't have the numbers right now, though. Means the government of India has released certain numbers.
Okay.
I don't have the numbers right now.
Got it. Rajeshwar, you are very confidently saying that the second half will be much better. And although only 3,335 kilometers were executed in April, August, you are expecting the full year to be much better.
Yes.
Are you seeing some early trends in September, October? And what are you basing this confidence on?
Yeah, so even if you look at historically and typically the way the construction activity goes on ground, in the second half, the construction activity picks up quite significantly post the monsoon season. Q3 and Q4 usually accounts for anywhere between 55 to 60% of the overall execution for any construction contractor. It could vary from segment to segment, but in road space, at least 55 to 60% of the overall execution happens in the second half of the year. In addition to that, as I was mentioning, because of the uncertainty around the commodity prices, deliberately, it's not about the lack of order backlog. Order backlog was adequate enough. The ministry is adequately funded. Despite that, because of this uncertainty, developers have deliberately gone slow. So now it should pick up because the orders are in hand, and at the same time, there are no funding challenges. And as I mentioned, H2 typically accounts for 60% of the overall execution. Sum total of all this should result in sharp improvement in the execution now.
Yes, but what Vijay Kumar is telling us is that input prices are still high, and there is severe competitive intensity which is leading to undercutting.
Yes.
And will that be major hurdles in the second half also? Even if they do as projected, we are going to do only as good as last year, not better.
That's right. Yes, not better. Right. So yes, the competitive intensity has been quite high in this segment. See, what is happening is, if you look at the state governments, the overall fiscal bandwidth for a good number of states has been constrained, because of which the new project awards remain subdued. As a result of which, most of these developers are actually shifting towards central government funded projects, be it railways or roads and drinking water supply projects under Jal Jeevan mission. Consequently, what we are witnessing is the number of bidders who are participating in the road sector has shot up quite sharply.
Oh.
If you look at the last 6 to 8 quarters, on average, for each bid, there are about 35 to 40 bidders vying for these contracts, because of which we have seen that these bids were placed at about 30 to 35% discount to NHA's base price. What this would result in is, if the discipline is not maintained by these road contractors from the overall credit perspective, it would have adverse impact on the profitability and could also result in challenges in working capital management. So that is one area where contractors should be very careful and cautious, because quoting at a substantial discount would hurt them in terms of the profitability, especially at a time when the commodity prices are at an elevated level.
Fair enough.
Now, the other point which I wanted to make is, in case of road contracts, when compared to some of the other segments, the price variation clauses are quite strongly worded, meaning some of these commodities, like for instance, bitumen, fuel, cement, and steel, all these are linked with the respective commodities price movement, because of which, to a large extent, the variation in the price movement for these commodities should get passed on to NHA or MOTH. Only in cases of commodities where it is linked to a broad-based index, like for instance WPI or CPI, and not a specific commodity-related index, the impact on the contractors would be relatively higher, because there will not be one-to-one correlation between the movement in the commodity prices in these instances.
Okay, fair enough. Mr. Vijay Kumar, what has been the awarding by states? Has that been any better, or is it lower? Because at least when you get the overall fiscal numbers of the states, CapEx performance is pretty poor.
Correct. So, overall, if you see the capex performance is, as on the part of the government, not only road, on the whole infrastructure, if you see, there is a slight increase. If you see the quarter one capex by the central government, there is almost like 30-35% of increase in the expenditure. However, in respect of private capex, that is going down. It is not picking up to the extent of what it is required post-pandemic, or you call it as monsoons.
My specific question, Vijay Kumar, are states awarding less than they used to, say, 2-3 years ago, say before COVID?
Correct. This is because what I guess is the government is still watching the the kind of uncertainty is what we are having right now.
Okay.
And
No, I'm not asking for the reason. I'm not asking for the reason, Vijay Kumar. I'm asking: is it a fact that states are awarding less? I just want to know the number of awards in the market, center and states.
Correct. What you're saying is right. These awards have substantially come down in the quarter one.
Okay. From the states as well.
From the states as well.
And it's not picked up. It's not picked up in September, October.
September, October, I think we are seeing a marginal improvement, I guess.
Okay.
Mainly, the state, as far as the states are concerned, the revenue consumption is increasing more. Unless otherwise the capex is not increasing.
Okay. Well, just a final quick question out of time, Rajeshwar. When you look at the date, budgetary allocation, this year it is same as last year for the for roads, and the extra budgetary resources don't seem to be there at all. So therefore, should we expect some kind of lesser performance than last year?
No, need not be. See, what is happening is, if you look at the NHA's debt levels, they have increased quite significantly over the last couple of years because of the Bharatmala Pariyojana program, which they have launched. And the initial period was largely funded by the debt raise at NHA level. Now, if you look at the overall debt levels as of March 2022, I think it should be about 3.4 lakh crore. Considering this increase in debt levels, it's a deliberate attempt from the government of India that this year, the entire funding would happen through the budgetary allocation, not through IEBR.
Got it.
That's the reason why they have not allowed additional borrowings for NHA. But even if you look at this 1.88 lakh crore, which got allocated in the current financial year, it should be sufficient for the current awards as well as the execution that is likely to happen on ground. It should not have any impact in terms of lack of funding. Should not be a challenge.
Got that. That's very, very positive. Thank you very much, Vijay Kumar and Rajeshwar, for enlightening us about the road sector. So awards are expected to pick up in the second half. A slight problem because of the rise in raw material prices and a certain hesitation on whether everything could get passed on. So a margin issue, but no problem with orders, at least not expected. Wrap up on Bazaar on that note. Chartbusters up next.